Okay. Good morning, YouTube. Good morning, Discord. 1 minute till opening bell. Once again, ignore this magenta line. This is the pre-market, so because the volume is different from pre-market to opening bell, the volume is just different. So the trading's different in pre-market and overnight. All right, opening bell. Here it is. I mean, it may hold up. We don't know yet. So that's why I don't like to trade within the first 15 minutes. I let the first 15 minutes tell me what's going on. So we'll see if we're going to continue this downtrend right now. So again, technically we're in a downtrend. So we're technically in a downtrend. So we want to look for the put options. We want to look for a setup for puts because we're in a downtrend. On YouTube I have music playing, but I'm not sure how to get that going in Discord. I'm sure I could figure it out. So yeah, it looks like the downtrend is continuing. I want to look for a bounce off this white line. We're going to see what happens off this white line. Another thing is this yellow line right here is a 5-day moving average. So it's catching up to the price. So the price wants to gravitate towards this normally. So 608.82. 608.82. So somewhere down here we're looking for the moving average to touch that moving average. So we're going to leave this orange algorithm up for a little bit. I'm seeing rejection off this orange. So we might be at a tipping point for maybe an up cycle, a bull cycle. A bull cycle meaning price going up. We might be at a tipping point for an up cycle right now. Now up cycle doesn't mean the whole day is going to trend up. It just means this cycle right now coming up should be a bull cycle coming up. Yeah, a lot of indecision right here. So if you watch my video on candles, you'll see that this is a hammer candle. This is another hammer candle, which means the price went all the way down to here within this minute, and the buyers pushed it back up, and that's why we see this upward pressure now coming in. Yeah, so that um oh shit. I just realized the YouTube is blank. I'm not seeing any image on it. Okay. All right, as expected, this bull cycle, the up cycle is coming in. All right, let me do some work now. All right, we're gonna see how this purple holds up for right now. But technically, we're in a downtrend. I'll tell you when we're in the uptrend. It's coming shortly. This is just like a pullback, right? Because it doesn't go straight down in a straight line. There's waves. So this wave, when the waves happen, it's called cycle. So this is a bull cycle it's going through. The bull meaning it's going up. All right, first thing we want to look out for. That'd be the ideal setup for an up, okay? That'd be the ideal setup. So your least amount of risk is at this flexion point for the down. I still got to verify this purple, so give it a second. Don't take any trades before 15 minutes. Rule of thumb. You can do what you want, but this is my rules. Sometimes I miss out, but I've been burned so many times, like trying to go in and then it, the whole market turns around on me. So just take my time. There's no rush. Setups are going to be there. So again, your least amount of risk was at this flexion point that I just drew. So if you did take this trade, you're protected. Your trade's protected now. Now you just gotta hold on. Gotta hold on for dear life at this point. Keep a mental note of that. Okay, now we want to see this blue. See how this blue holds up. For the down, we want to see something like this. That'd be the ideal setup for the down. That'd be the ideal setup for the down. So if this blue breaks, and we get strong selling continuation, then that's going to tell me that this blue algorithm is going to be our confirmation of a downtrend. So it should be, if it breaks, we got to see. But so let's say I have to leave for the day, and you need another trading plan. It'll be building liquidity in purple, right? In this purple, and then break a blue will be your trigger to know, okay. Which means that your safest entry is when, on the put, is when purple breaks, and then your confirmation is when blue breaks. But we got to see how it plays out. Let's see if it dances on it or if it breaks right through. Yeah, so this blue is holding up, right? I might have to adjust it just a bit. All right, there we go. Now remember, when I'm drawing these yellow paths, I can't, sometimes I'm damn near spot on, but what you're looking for basically is the shape. When this shape takes place, that's what you're looking for. Not necessarily for it to be exactly on the line. You're looking for the shape to take place. So when I'm drawing the head and shoulders, which this, oh damn it. So this would be the head and shoulders. That's what the shape needs to look like. But yeah, you're looking for the shape to take place. And a good indicator of this thing happening, whatever I drew, would be the breaking of this blue. So right before it breaks the blue, ideally, you want to see it bounce off and then come back through. That's the ideal scenario. But until then, we're still in this uptrend, right? Another thing we want to look for, okay. So we got to see where this closes. We got to see where this one closes. Another thing we want to look for is those candles I was telling you about, right? So it's either an inverted hammer candle, which looks like thin right there, and then you'll see the body like this. You want to look for maybe something like that, like an inverted hammer, or a strong momentum candle, which is just a big candle like that. So if you think it's going to go down, you're looking for those triggers to tell you, oh, okay, maybe the price is heading in that direction. In the inverted hammer, or if you see a strong momentum candle, a red candle in other words. But as of now, your safest entries, because we're technically trending up now, in the short term we're trending up, your safest entry is going to be the call on the bottom of blue. But it's so weak, I would just wait. It's so weak right now. Because that bull cycle didn't tickle my fancy, so. But we'll see, we don't know. We honestly don't know. We'll see. So if we just went through our bear cycle, still in an uptrend, that would tell me that this next bull cycle is going to be significant, meaning some strength. Now we started the bear cycle. Now we're starting the bear cycle, so you're gonna see how much strength it has behind it. So your blue broke. And look, as I said, break a blue. So this is least amount of risk. Expect a little retracement now. Now that the blue broke, expect some retracement. There it is. Look at it. Look at it go. There it is. There it is. Look at the money. Someone's printing money right now. Someone's printing money. Once this blue broke, so technically this red candle right here broke blue. Technically. There it is. And I hope you see now, we're just managing the risk. We don't know exactly what's going to happen, but we need to know what it looks like before. So let me show you what it actually looked like, so you can get a better idea of how vague it can be. You know, sometimes I'm damn near spot on with the price, but this is how vague it can be. Remember I told you we needed that bounce right before the drop? That was that right there. I told you we needed that bounce right there. That's what I'm talking about right there. So it doesn't, you know, the price can't follow exactly all the time, but that's what I'm talking about. Look at this money. Look at the money being printed right now. Look at it. And this is why you're here, to learn this stuff. This is why you're here. This is why you're here. Look at this money that's being printed right now. This is live. Amazing. Perfect. Perfect. Absolutely perfect. Your trade's protected. You have nothing to worry about. You have nothing to worry about. You're actually in profit. You're actually in profit right now. And it still has a little bit of room to go. Still got some room to go down. So, because I told you we're looking for put entries in the beginning, right? In the morning, we're looking for put entries. Why? Because we're in an overall downtrend. See this orange? So your first profit target is going to be on this orange. See how it's rejecting off this orange? That's going to be your first profit target. Perfect. Look at the money being printed. Now, if there's going to be any retracement, so if you got in on the break of blue, if there's going to be any retracement, look for something like this. Damn, I was just talking on mute. Now we gotta see if it rejects off the bottom of this blue. But for an early starter position, that was a good play. If you chase this down and caught some money, just to get some quick wins, that was a good play. Alright, let's see what we got next. Alright, so as you can see, for sure this orange is a thing. This orange is a thing. I'm gonna make a half channel here. That's what we want to look for if the price is still going to head down. That's a point of contention. So here's the up path. If the price wants to head up from here, hold on, let me figure out the up. I don't have any clear structure for the up yet, so I'm not going to try to guess it. I think I see something, but I'm going to let it play out just a bit. If I were to draw something right now, I would just be guessing. I don't want to guess. I need price action. I need something. I need structure to build to tell me what the path up looks like. Otherwise, I'm just guessing. I don't want to guess. And now you see here what hesitation can mean, right? Because if you try to get in on this candle, chances are you got filled way at the bottom. And if you got filled at the bottom, look what happened. Now you're going to have to wait for this to play out. And if you had your stop too tight, then you would have got stopped out. So entry is key. You can't hesitate. And if you know the thing's going to happen, or if you think the thing's going to happen, you got to go in where your least amount of risk is. So just in case you don't get stopped out, or you get stopped out for very short, right? Very small stop out. Those are your two paths. This is why I put this circle here. Let it play out. Let it play out. If you didn't take a trade, or if you missed a trade, there's no big deal. We got all day. We got all day. Let it play out. We need more imbalances, right? We're pretty much going sideways. There's no imbalance here. We need imbalances. We need the price to go, you know, strongly one way, strongly the other way. We don't have that. We're literally at where we opened up. Come on, little more, little more, little more, little more. Make my day. Please do it. Please do it. I like to see some strong selling right now to continue this, for continuation. We need to see some strong selling for this to continue. I don't know if we're going to get that. I'm not sure how valid that yellow is, so don't pay any attention to that yellow for right now. Don't pay any attention to that yellow. I'm not sure how valid. Looks like we're about to start a bull cycle now. So if you have the nerve to take this flexion point here to ride this down, small profit, good for you. But we're still sideways. We have no imbalance. We're gonna see how valid this yellow is right now. Well, if this yellow breaks, that's going to be a thing. It should have enough liquidity inside this yellow. We'll see. If yellow breaks and price goes crazy down, then we'll know. So if yellow's a thing, that'd be the continuation path, if yellow's a thing. But what we do know is that orange is support, right? So if you bought off orange, you're fine. Orange and yellow. So if this support breaks, that should tell you something. There it is. So I think the original line was like this. That was the original line. Let it play out. No reason to chase anything. If you didn't take a trade, if you're unsure, or if you're just trying to get used to the system, let it play out. You'll see. You'll see how to manage the risk. Because what we would like to see play out is something like this, right? So we don't know yet. There's no imbalances. This is early candles. Can't do anything in here. I took this one right here and I chased it and I stopped out early, so didn't make too much. There it is. So now this orange is going to be a big deal too, right? Because we've been hitting orange as support. So when orange breaks, Remember, we had this, right? Now you see how erratic it could be. You see the patience you need for certain things to play out. You see where the flexion points, how those flexion points, if you remember, I had this, where is it? I had this circled right here with a flexion point, right? Okay, so that move played out. Easy. Easy. So this candle right here, I'll zoom in. This was a stop hunt. Stop hunt is when the market makers, they manipulate in order to stop people out because they knew everyone got in here and they pushed the price just enough to stop everybody out. And when this stop hunt happens, that's what enabled the rest of the price to go down. And if you remember the entries from the video that I gave, what's this candle right here? Look at the candle. That candle was the one I just drew a little while ago, like this, like this, like this, right? Exact same candle. The inverted hammer. Look at it. This is that video that I made of candles and time frame. This is what I'm talking about. Look at it. Perfect. It was exactly as I drew it. So this is telling you when your entry is. I'm going to clean the chart up. And if you remember, I've been saying since this morning, we're looking for put entries. We're looking for short entries because we're not in an uptrend, right? We're looking for the put. So when I'm drawing you the long entries or the call entries, I'm saying what it needs to look like in order for that to happen. However, our preference is for the put entries. And look, again, it's bouncing off orange, goes up. Bounce off orange, goes up. Bounce off orange, goes up. Now we need to see the next imbalance. We need to see the next setup. So as of now, we're firmly in this orange right here. I'll highlight it. We're firmly in this orange. Right? Every time it hits orange, it goes down to the bottom orange. Top of orange, bottom of orange. So now we need to see what happens here. This is a major support, or excuse me, major resistance up here. So a short term up would look like so if this orange breaks, that's going to be something significant most likely. And then we want to look for continuation. Major support right here. Major support. The most risk is right here because this is the 50-50 shot down here, this orange. This is the 50-50. You don't know. It could bounce right back up, or if it breaks through, it could have a significant break. Why is it significant? Because of all this liquidity that's been built up. Yeah, we're Looks like we still got some room for the down. Still got some room for the down. All right, let's see how this orange plays out right now. If you're on YouTube and you want to join the Discord, it's LiveSPYTrading@gmail.com. Send me an email, express your interest, and we'll get you set up. Remember, we're looking for short entries. We don't want to buy shorts on the bottom. We don't want to do that. We want to buy shorts at the top. If the trade presents itself, then you go for it. But we don't buy shorts at the bottom, right? That's just not gonna happen. If you missed a trade, you missed a trade. No big deal. If this thing dumps right now and goes to goddamn 0, oh well. We're not buying shorts at the bottom. Your short should have been up here when I drew it way earlier. Your short should have been over here when I drew this flexion point, right? When I drew this earlier, that should have been your short over here at the flexion points. You can't buy it down here. Don't, because if you're thinking about it, that's FOMO. You didn't miss out on anything. If it wants to head up, this is the path it has to take. Since the market opened, we've only moved cents. So this is really tough to trade in. Very tough to trade in. And look at these engulfing candles here. This is tough to trade in. All we do have confirmed is this solid orange down. That's all we have confirmed right now. If it is going to go up, I'd like to see it break out of the orange and then come back up strong. But it's just dancing on the bottom of orange. So this isn't the setup I'm looking for. Doesn't mean it's not going to happen. It's just not normally what I'd like to see. What we do know is your buyer calls on the bottom of orange, buyer calls on the bottom of orange, buyer calls on the bottom of orange. That's what we do know. And since the trend is going against you, meaning since the trend is down, if you're buying a call, you got to chase it. You got to chase your stop, right? Because you can get one of these big candles stop you out. So if you're brave enough to do this flexion point in a downtrend, you have to chase it. Whenever you get profit, take your profit. Take your profit and move on. Even if it's a couple dollars. That $2 is a lesson you'll never forget. So continuation down is going to look, I'm going to clean the chart up a little bit. Remember that. Remember this pattern. The ideal continuation is going to look like this. That's the ideal continuation down. So if we get here, that's going to be a major flexion point. So you have to remember, I said that if we break this yellow, that's going to be something significant. So if you didn't get in on the top, right, when I drew the first flexion point, if you got in, I don't recommend getting in here because you're going to have to wait for the retracement, right? This retracement that I drew. So you want to see it come back up against the bottom of yellow and then reject off the bottom. So essentially, we're not going to look for any call options until the safe call options until we get above this orange right here. Until we get above this orange, I'll make it even brighter. Until we get above this orange, we don't, you know, if you took the risk here, cool, good on you. Good on you. Because you knew that we're touching bottom of orange, buy the call. Bottom of orange, buy the call. Bottom of orange, buy the call. You see that happening. For me to be convinced of a strong move, I want to see it break orange and come back into it. You don't always get it like that, but woo, look at this. Couldn't have drawn it better myself. All right, now we're at this orange line. What's going to happen here? Remember, the ideal setup is for it to come back and touch this yellow and then bounce off. That's the ideal. Doesn't always happen like that. So I'm telling you, this is a major point right here. I like to see like a couple small red candles followed by one or two. I like to see 2 red candles and then one or two green candles. That's what I like to see right here if this is going to go up. So if you didn't get in on this flexion point, you got to wait for the structure to set up here. Okay, remember, we want to build liquidity inside purple. When it breaks purple, that's your signal. When it breaks blue, that's your confirmation. This would be the ideal down, right? Build liquidity in purple and then break blue for the down. Let's see how strong the selling is here. We knew this was going to be a major point. We already knew this, right? I've been saying all morning, you're buying the calls on the bottom of this orange and the puts at the top. So if you went in here to take the risk, okay, I get it. Makes sense. That one makes sense. I get it. And if you get stopped out, if it goes against you, cool. You stop out for very small, and then now you know the direction that the price is going. We can't lose, right? Even if you take a losing trade, you can't lose for the day. Because sometimes those losers is what tells you what's going to happen, so you can win double on the other side. And these points of contention, this is the 50-50 shot, right? I don't know what's going to happen here. That's why it's a point of contention. This is your 50-50. Perfect. Perfect. And also now you see the type of patience you need to maintain in order for these plays to play out, right? If you get nervous and stop yourself out, then you stop yourself out. But the reason why I'm drawing these channels here is to tell you when your profit targets are. So once the price breaks this green, let's say if you went in on the flexion point right here, if it breaks the green, that's one indicator, okay, we might be going another direction. Take your profit and get out. But if you're holding runners, then we'll go into that in detail later. But we didn't break this blue yet, right? The price needs to close below the blue line. We didn't break this blue. The price needs to close below. We're still inside the blue. Here we are, major flexion point. What's the price gonna do? Major flexion point right here. And you can't chase candles here. You can't see a candle starting to go red and, oh, okay, put now. That's not how you do it. You have to make your decision. Like I said, you're buying puts at the top. You're buying puts at the top and calls at the bottom. Always, 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 always. Because your least amount of risk is there. And if it doesn't work out for you, then you lose very little bit. You live to fight another day. But if you're FOMOing in here, no, I don't recommend that. That's not what I recommend at all. That's not our trading style. But we did know puts at the top. You're buying the puts at the top. Least amount of risk is right here. So if you took this, fine, there's nothing wrong with that. And we do know we're looking for put options. Why? Because I've been saying since this morning, we're in a downtrend. We want to follow the trend. We don't want to fight the trend. We still never close below this blue. Never close below the blue. And we're right back to market open. We haven't moved anywhere in all this time, in an hour, damn near. We haven't moved anywhere in price. This is a tough trading session. There's no imbalances really. All we did know was buy the puts at the top. That's all we know. Myself personally, I took one trade and that was over here. And I got stopped out somewhere over here. I got stopped out. All right, we got to let the imbalances play out. There's actually no imbalance at all. The price has just been in this slow grind down. That's what we do know. Clean this chart up a bit. So the reason why I have this circle here is because it's going to tell me if this orange is still going to be the trend, or if we're getting into the new trend, back into the yellow. That's what this circle right here is going to tell me. And if we do go up, I want to see this. I want to see price break above, healthy, come back, and then bounce off. So if you're at this point thinking like, well, dude, you're drawing so many different paths, I don't know, which one to go in on. This is the art of trading, right? You have to assess your risk. The risk assessment is, as of right now, buying the put at the top. That's the risk assessment. And I'm drawing the path for the other direction, for every direction. So if you've been paying attention, we're buying puts at the top, calls at the bottom of this orange channel. You can't go in here. If you miss the move, you miss the move, but you can't go in here. This is too risky for my liking. Now we are about to enter a bear cycle. I don't see any divergence, so let's see what happens. Let's see. No reason to take a trade right now. You would have had to get in on the bottom, right? At this flexion point. If you get in here thinking it's going to go up, okay, it could, it might. But if you're taking the call here, this is your least amount of risk. But you're fighting a downtrend. So that's what's working against you. You're fighting the downtrend. We won't be confirmed of an uptrend until above this orange. Has to close above. So this one closed above, so now we need to see if it has any strength. Now you want to wait for continuation. What does a continuation pattern look like? Like this, as I drew it before. We want to see it staying firmly inside this blue. This could be a tipping point here. Okay, so if you took this flexion point here, good on you. Look at the move. If you took this shoulder right here, good on you. Look at the move. That's the risk. We don't know. But I'm telling you the path that it needs to look like. I'm telling you what it needs to look like in order for that to happen. This is good money. Look at this money. This is good money. I told you when we break this orange, now we're looking at a different trend now. Now we're looking for calls. Now we're looking for the long. If you didn't get in here, it's too late. Wait for the play to move. Oh, wow. Look at that. Look at that move. Jeez. Touched exactly on this white line I have here. So now we need to see what's going to happen here. Because if they're faking out, this is what's going to happen. I mean, I couldn't have drawn this any better. I couldn't have done it any better. There's no possible way. There's absolutely no possible way. So it's impossible for me to assess your risk tolerance. So if you're expecting me to be like, hey, buy now, do this now, I can't do that. That would be irresponsible of me to do that. I'm showing you where the risk is. What certain paths need to look like. Now we're on the top of this yellow. Let's see what happens here. Looks like it's got some room for the up. So continuation, you want to see here two paths. And look at that. If you took this put right here, look how crazy this market is. It's really tough to trade. You gotta have some nerves of steel. But what I'm trying to show you is to where to identify the risk. Therefore, if one stops you out, now you know the direction. Now you know how you can make the money. That's what I'm trying to show you. Right? And this blue is going to be significant. If we break this blue, I mean, it looks like we got some room for the up. So let the market digest this, let it settle. No reason to go in on a trade right now. Absolutely no reason to go in on a trade. Let it settle. Let everything play out. Let the imbalances expose themselves. You know what it needs to look like. You now know exactly what it needs to look like. So For the up scenario, oh, what the shit? For the up scenario, we wanted to, breaking this magenta is going to be your clue, right? Breaking the orange is going to be the confirmation. So that's for the up. Now for the down, it's going to be breaking the purple is going to be your clue. Breaking the blue is going to be your confirmation, right? So the Discord members, now you know what to look for. You know the algorithms to look for your up and your down. So now essentially you can't lose. Now your risk is whenever it breaks these channels. That's where your risk is going to be. Your least amount of risk is the break of the channel. Your risk increases when you go in on the other channel, right? So for example, you build it up in magenta, right? Price is going down, magenta is going down. When it breaks this is going to be your least amount of risk. And remember, ideally, we want this to dig down a little bit deeper. Ideally. We want it to dig down a little deeper and touch off this blue. You don't always get it like that, but that's the ideal scenario. So to recap, buying the calls on the bottom of orange was the move. Now we're at the top of orange. Now we need to see what happens here. We need to see. Now we're here. Point of contention right here. This is going to tell us which way the market's going to go. If we break this blue, look for some more down. If we stay firmly in this, if we're firmly in this and we break the blue, look for some more down. Because we've identified the scenarios for the up and the down. So to recap again, if the price is going to go down, we want to build liquidity in the purple and break the blue. So when the purple activates, I will plot it for you. So if you took this head, you're firmly in profit. Like you're in profit right now. If you took this flexion point up here, you're firmly in profit. Your trade's protected. Now you need to think about taking profits here on this blue or on the break of this magenta. That's your risk tolerance. I don't know. So the break of this magenta, I'll highlight it. This is where you need to start thinking about taking maybe profit target 1, profit target 2, or you're letting this ride. Either one. I don't know your risk tolerance. I can't decipher for you how much money you want to make or how much money you're willing to lose. I can't make that determination. I mean, it looks like we got some more room for the up, but we don't know. We're just going to let the price action tell us. If you're not already in a trade, stay out. Stay out of the trade if you're not already in it. There's no reason to get in now. It's too late. You needed to make your call when I drew the flexion points. This is teaching you about hesitation. When you hesitate, you risk two things. Either you're risking the loss of opportunity, meaning you could have made more money, or you're risking the loss of just straight up loss, like, oh, okay, that trade didn't work in my favor. So if you took profit target 1, break of this magenta, that's profit target 1 hit. Profit target 2 technically would be, if you went in on this flexion point here, would be the break of orange. And this is why we don't have to know the direction the stock market's going to go. We know the probabilities, the most likely, and it's up to you to decide which one you're going to go in on. And if you get it wrong, it's fine, right? Because your loss is minimal, because now you know the direction, and the gain on the other side is going to outweigh your losses. So it's mathematically impossible to lose for the day. You may lose a battle, but you won't lose the war for the day. And if you're sitting here thinking, well, this is too much indecision, then this is what the stock market is, because no one knows what's going to happen, right? No one could possibly know that. But what I do know is what something needs to look like for the price to go in a certain direction. That's what I do know. That's what I'm offering. And you can see I drew the flexion points like pretty much spot on. Alright, so it looks like we're going to be starting a bear cycle now. We got to see how strong this bear cycle is going to be. If you notice, this purple hasn't been activated yet. The purple has not been activated yet. So if it's going to go down, let me clean this up. Remember this stuff, right? I'm going to clean this up real quick. Remember all this that I have. I'll just get rid of this one. If it's going to go down, ideally, what you want to see is this. This is the ideal scenario for the down. Starting a bear cycle. This bear cycle may be weak as shit. I've seen bear cycles, bear meaning down, I've seen bear cycles that actually trend up. So we don't know. That's why this is an indecision point here. If you're not in a trade, now's not the time. So if we break through this orange, this is the continuation for the orange. Watch. Something like that. I could have drawn it better. Hold on. That's what you want to see if it's going to continue. If we don't see this playing out, then don't go in. But now you know where your risks are. I can't tell you there's big resistance at the top of this orange. Getting mixed signals. Don't know what's going to happen. We're just going sideways. There's no imbalance, no needs. You can't go in here. If you didn't already make your decision, it's too late. Gonna clean up the chart a bit. So hopefully everyone or most people in the Discord are doing paper trading right now. And with this paper trading, you're gauging yourself. You're gauging how the market reacts. You're gauging your hesitation. You're gauging your take profit. You're gauging all of that stuff. Now we're in a bear cycle meaning down. We got to see how strong it is. Meaning your least amount of risk is here for your put. Least amount of risk. Least amount of risk for your put. Why? Because we're at the top. If it goes against you, it goes against you. Nothing you can do about that. But if it is going to go up, I want to see like a strong candle up. Now we wait. Now we wait outside. No reason to take a trade right now. Yeah, we had a trend up in the bear cycle. Now the ideal setup, again, let me draw it again. We want to see it touch off this yellow, retrace back down to this orange, and then continue. So what that means is I don't recommend you going on a call or a long until we retrace and touch this orange again. I want to break out of the orange, retrace, touch the orange, and then bounce off the orange. Until then, your safest bet is the put at the top. Breaking the blue is going to confirm it. Don't think we activated the purple. Let me try. That's not a very strong purple, so I don't know I don't think it's activated yet. So on the minute chart, it looks like we're gonna hit a bear cycle, but on the higher time frames, it looks like we're just starting a bull cycle. So we're getting indecision here. So this is gonna be a major point right here. Major point right here. Let's see what happens. Your least amount of risk is a put at the top. A put meaning you think the price is going to go down. Least amount of risk. If they want to stop you out, they're going to do a big green candle to stop you out. And that big green candle will also indicate momentum for the up. Very low volume here. See how small the candles are? Very low volume. This is impossible. This is chop. I don't recommend even taking a trade. This is not for the newer traders, right? This is the most risk. Now, if you do take this inverse cup and handle, good for you. Well, we don't know what's going to happen. But we do see that it broke blue. See how much strength. So if you took this flexion point here, you should be good. Your trade's protected. But this is such low volume. This is very low volume. This is... I want to see stronger moves. If you took the handle flexion point here, you should be protected now. Your trade's protected right now. Even if you got in at the worst point, your trade is protected. If you waited to the break of blue, that's the risky one, right? The risky one's the break of blue. The safe one is at the flexion point. The risky one's at break of blue. So we want to stay in this magenta. As long as you're in this magenta, you're good. Let's let the candles play out. Let the candles play out. This is chop. This is sideways chop. There's no trading in here. This is where people get exit liquidity. That's what I call it. When people start trading in here, this is exit liquidity. We need this yellow to break. We need this yellow to break. If it wants to head up, again, it's going to look like this. Don't trade in here. Stay out. Just stay out. There's no trading right now. If you're in the trade, breaking and closing outside of this magenta, that's your clue. So we're still inside the magenta. If you took the handle, good. If we break this yellow, that means this bolt up is probably not going to happen. All right, so if you took the handle or the cup or the head and shoulder, you're well in profit now. You're well in profit. You're well in profit. And I told you the least amount of risk is the put at the top. Least amount of risk. So you have to pay attention to what I'm saying. I'm not just talking just to talk. Now, if this closes below this yellow, then we're going to get some stronger movement. There it is. Easy claps. Easy claps. Look at the money. Look at the money. Look at the money. I told you where the risk was. I said exactly your put is the safest option here. I'm not going to tell you buy a put now. That's not what I'm here for. I need you to learn it. I'm trying to explain to you the risk. And I'm trying to show you that the put at the top is the safe. Look at the money that... Oh, today's a good day. Took a while to get here, but we made it, right? Took a while to get here, but we made it. Now we have a very strong selling. All right, so now we want to see a little retracement's fine. Look at this money rolling in right now. Look. I said specifically a put at the top is the least amount of risk. A put at the top. I told you what it needed to look like if it was going to go up. I told you we're going to build liquidity inside of purple, and then break of blue is your confirmation. I told the Discord members, you guys know this. I've told you what to look for, right? If it breaks blue, and I even highlighted it, I told you what was going to... Look at this money. Look at this money we're printing right now. Look at the money we printed. If you didn't get in on this flexion point, it's too late now. Now you gotta wait for retracement. Don't chase this. Do not chase this. Do not chase this. That's what continuation is gonna look like. Look at this money we're printing today. Are you not entertained? Are you not entertained? Look at this money. Look at the money. I think we can get a couple more bucks out of it. Couple more bucks. Don't forget that. Oh, so glorious. Beautiful trade. That was a beautiful trade. Amazing. Amazing. If you remember, I told you we're not going to look for any upside until we break this orange line here. That happened over here. So we broke on this candle. So your entry for the up was on this candle. I actually drew the flexion point a long time ago to show you what needed to happen for the upside, okay? Once we did this and I saw this big wick, if you looked at my wick video, my candle video, once I saw this wick, I knew that this was another flexion point. I'm telling you, if you watch these videos, it tells you exactly where your entries are. I did a video on entries and candles. Watch that video. It's going to help you because you will know how to identify this. I didn't just randomly put this there. I didn't randomly just say, oh, you know what, here. That's impossible. That was a beautiful trade. Good job. All right, let's clean up the chart. Let's wait for the next setup. And let's say you were wrong on on any one of these, right? Let's say you were wrong and you went in at the wrong time or you got stopped out. There's always another setup to make the money. Always. Because now we know what is going to happen. As long as your stop loss is reasonable, and as long as you let your winners win, you'll be fine. Let me clean up this chart a bit. Here we go. All right, let's let this play out now. That'd be the ideal setup right there, if it's going to continue up. That'd be the ideal setup for the up. This right here is called a 3-candle stack. 1, 2, 3. 3 solid candles going in a direction. 3-candle stack. That's an indicator of direction as well. So we want to see what happens up here at this white line at high a day. The ideal setup for continuation would look like this. If this has the strength to stay inside of purple, then we're looking for this right here. Good job to anyone who took some of these trades. You should be paper trading, by the way, but good job. We did good work today. And if you made money, you should be done for the day. Just leave. Just fucking leave. You got nothing else to prove. Leave for the day. There's no reason to try to overstay your welcome. Now we gotta wait for the next setup. We gotta wait for it to present itself. You know what it needs to look like. So again, breaking this blue is gonna be your signal for the down, okay? And breaking this yellow is gonna be your signal for the up. So we already knew this. There's no surprise here. So again, for the down, you want to build liquidity in purple. When it breaks the blue, that's your indicator. For the up, you want to build liquidity in this magenta, and when it breaks the yellow, that's your indicator. That was a beautiful move. That was absolutely fabulous. I'm happy with that put. And I was telling you, a put at the top is your safest risk. That is the safest bet. Puts at the top, calls at the bottom. Easy. As long as you stick to that, you won't fail. You will win. You will win. So knowing where the top and bottom is, that's where you got to learn. So you got to watch that candle video I made. All right, I'm going to stay on here for maybe another 30 minutes, then we'll wrap up. We'll see what plays out. We'll see the next setup. This was a beautiful inverse cup and handle. All right, you see the point of contention right there. So here's how we use time frame. If you look at the 1055 5-minute candle, this is a hammer candle, right? Because it does this. You see the body, it's filled in, and then the big wick on the bottom. This is the hammer candle. So if you use this, the time frame, you can see that we had some pressure going up. Even though it was a red candle. All right, let's see what happens here. There's no trading right now. We want to see this reject off of here before we have an idea, or break out of this blue. We haven't activated this magenta yet. Maybe some weakness coming in here. It looks like we are overbought for the short time frame, but we're still trending up. And again, I said if we break this orange, this is the uptrend, right? Now we're in the uptrend. If we break this orange, I said it a long time ago, this orange is going to be the indicator to tell you what direction. And I get it, sometimes it could be like information overload, like you're saying a lot, dude. You're saying a lot. But you gotta keep these mental notes in the back of your mind. You just gotta do it. If you can remember goddamn song lyrics, you can remember this stuff. A little bit of weakness coming in. We're gonna see how far it digs. So we can't go short until the safe short would be about here. Again, at this orange. To know we're back in the downtrend. This orange line. Now, could it reverse right now and go straight down? Sure, it could do that. But I would like to see, let me clean up this chart. I'll leave you guys with some gems to look for. So remember this, right? Remember this right here? I already have it. Look at it. Look at it. Look at it go. You can't draw it any better. You can't make it any better. You just can't. Alright, but here's for, if it's going to head down, this is what we want to look for, okay? This is what the down's going to look like, okay? That'd be the ideal setup for the down. Maybe a little higher than this. Maybe somewhere like this. This is the ideal setup for the down, okay? Keep that in mind. Take a screenshot or something. So when you see this playing out, especially off this yellow here, this is what you're looking for. Got another 15 minutes, I'll be with you guys. Now this looks like a strong momentum candle. This looks like a momentum candle right here. So that's the down. Here goes the up. Remember what the up looked like. It was, where were we? I think we're about here. It's going to be breaking above, coming back to touching this yellow, and then bouncing off the yellow. Your point of contention right here. So if we're breaking below this blue, that should give you an idea of what's going to happen. Clean up the chart just a bit. Again, if you looked at the video that I put out about candles, I just said this looks like a huge momentum candle, right? This momentum candle is telling you, giving you some idea of direction. At least for the short term, because we're in the minute. Look, I just said this is a momentum candle. I just said that we want to see it break above, retest, and reject. There it is, look. Look. You have to watch these videos. These videos will tell you where your entry is. Look at this momentum candle. You can get something out of this. But the stock market always has two directions. It's going to go up or down, either one. So now you know what each scenario needs to look like. You can scalp your way to freedom, or you can swing trade. Now also over here is going to be a major point of contention for the long term, because we could see this. So now you know what to look out for. Let's see what happens here. All right, we got to see what's going to happen here. Looks like we got a longer term uptrend. That could all change, but it looks like longer term uptrend. But we should be starting shortly another bear cycle. Don't know how far that can dig, how far down that bear cycle could dig. Alright, when this plays out, I'm going to give you an example of risk management. I'm going to give you the example of risk management. We got to let it play out, though. I'll show you. I will show you. Just play out, let some imbalances come in. In the 5 minute, we're in overbought territory. We're in overbought territory, plus we look like we're starting a bear cycle. I'm going to let this play out, and then I'm going to explain how the risk management system works and why you win in any direction. Watch. Because this is the indecision point, right? So maybe some people went long expecting this to go up. Maybe some people went short expecting this to go out or to play out. Watch, we're going to explain the risk management. Let it play out. Let it play out. Mixed signals right here. Mixed signals here. I don't think technically we close below the blue here. It's hard to see. Okay, technically we did close below the blue. Let's see how it plays out. Let it play out. With a weak bear cycle. It's struggling at this orange. At the top of this orange, it's struggling. Which means your safest put is probably at the top of this orange. But now we're in an uptrend. We're fighting the trend. So you got to keep that in mind. We're fighting the trend now. All right, let's see how strong this this bear cycle is going to go. Let's see the strength. Perfect. Here's what happened. The same thing that's been happening all morning, right? It builds liquidity in purple, it breaks purple. That's your cue. Once it broke blue, now you have a direction. You can make some money on this. You're fighting the trend, so you got to chase this profit. You got to chase the profit over here. Get something out of it. But I do know we're fighting the trend now. You don't want to fight the trend. So we are technically in overbought territory. I'm seeing weakness in the higher time frames. Seeing weakness in the higher time frames, we're in overbought territory. So expect if it's going to go down, expect a strong move up before the down. Because that strong move is indicating that they're trying to weed out all the shorts. Everyone that's trying to buy the put now, because everyone's buying a put now. Everybody and their mom's buying a put right now. So usually that strong move stops everybody out, and then you'll see the move down. That's why you want to wait for continuation. Continuation is going to look like this. Hold on, let me find it. Let me find it. That's what continuation is going to look like. So don't go in just because it broke this, because it broke the orange and the yellow. You got to wait for it to pull back and then bounce off of it. Because like I said, a strong move, if it's going to come for the down, they're going to want to stop you out, right? They're going to stop you out probably to this flexion point before they drop it down. Alright, I gotta get out of here shortly, so that's what you want to look for. If it's gonna head down, let me clean this up. I'm gonna clean everything up and draw you a clear path. You want to see another yellow form somewhere over here, probably like that. Okay, those are your paths for the down. Running out of colors here. I'll do white. We're in this white uptrend. We are firmly in this white uptrend, which is very similar to the yellow. So I don't know if I need the white really, but seems to be working fine. I want to see this play out. I'll stay until it plays out. Tapering takes time, so if we're tapering in this inverse cup and handle, it's going to take time. You have to hold on for the long haul. Don't expect huge moves, especially after 11 o'clock. That's when they're at lunch. Trading compresses around this time. I've been getting a strong move down here. We got to see how we react off of this orange. I'll highlight it. We got to see how we react off the orange. So again, break a blue. If you got in over here, now you're gonna have to hold. You have to hold and pray, hope and pray. Safest entry was at the top of this one. Yeah, this orange is going to be a major point right here. This orange line. So to be safe, don't start shorting until we break yellow. To be safe. Don't try to call the top. Don't short until we break yellow. Now we need to see if this is a stop hunt. Gonna clean up the chart a little bit and show you what the up looks like now, because I'm gonna get out of here soon. Here's what your up looks like. We want to see another orange form. We want to see a purple. another rogue orange. Trying to do this super preemptive, but if it wants to go up, let it build liquidity inside the orange before it breaks. That's what you're looking for the up, okay? That's what you're looking for the up. Let this play out. Let's see how it reacts to this white. Wrong move. I took a small loss right here. Took a small loss around here. No big deal. Can't win them all, folks. Can't win them all. So reacting off this orange was the key. So it break a blue for your indicator down, break of orange for your indicator up. Your next major resistance is going to be at 612.27. Yeah, don't start shorting until we get around this 610.86. Don't start shorting until we get here. Otherwise, we're still in the uptrend. Okay, that's my time. We had a couple good trades, so we'll continue tomorrow. Have a good day.